Now that we've went over our universal model, let's move on to an Asian session model, a hidden gem. Now, before we start off, it is a highly requested Asian session model by our Asian-based traders from Twitter. So with Asia session generally being a lower probability session, this is the most consistent and high probability bread and butter based model, and it repeats, and it is easy, and it has very little moving parts. So we're going to be talking about the AUD JPY and the 2022 YouTube model. The kill zone for this model is 8 to 10 p.m. New York time, and Australia and Japan are 1 hour apart, and their sessions open are 1 hour apart too. So within the 8 to 10 p.m. New York time, both Australia and Japan open are in this time window. And due to this, there's a volatility injection in the market, and our focus is going to be on a 15-minute turtle soup long or short. So what do we want to see? If we are bullish, we want to see a 15-minute swing low get run between 8 to 10 p.m. New York time for a turtle soup long. And if we are bearish, we want to see a 15-minute swing high get run between 8 and 10 p.m. New York time for a turtle soup short. So over here we've got the Australian dollar Japanese yen daily chart. We're still going to go over our higher time frame draw, right? We need to know if we're coming from internal or external. So what do we see on this chart? We've got that external range liquidity taken, right? So we move from external to internal and from internal to external, right? So we can see that over here, this high has been taken out. So external range liquidity has been liquidated, and now we move back into internal range, which is this fair value gap. And how does that look like with premium and discount levels drawn out? Over here we've got our range low, right, into equilibrium down here, and then eventually, because we took out that external range liquidity, this is our dealing range high or our premium high. So over here we've got that daily fair value gap after we took out that external range liquidity, and that was our draw on liquidity going from external to internal. Now how does that look like on a 15-minute chart, right? And remember, we're going to look for setups between 8 and 10 p.m. New York time. We want to wait for that 15-minute stop hunt, and then we're going to drop down into time frame. So we kind of don't want to go into a 1-minute time frame because that is a little bit inconsistent. So we're going to focus on that 2 to 5 minute time frame. So up here, remember, external range was taken up here, right? So we can still look for a setup drawing into internal range. So there is a nice sell setup happening over here, right? With that 15-minute stop hunt. Over here, we're in that higher time frame internal range liquidity POI, this point of interest, right? We've got that 8 to 10 p.m. time window where we're going to be looking for that 15-minute stop hunt. So first of all, let's go over that sell opportunity, right? After we take that external range liquidity on the daily time frame, where our draw on liquidity is going to go to that internal range liquidity, which is that daily fair value gap lower, right? Now we wait for our Asian session model kill zone, which is that 8 to 10 p.m. and then we wait for a 15-minute stop hunt. Now we're on a 2-minute time frame, right? Not on a 1 minute, so we're going to be looking between 2 and 5-minute time frame. So over here we've got that 15-minute stop hunt happening, and now we're going to look how that looks like with our PD arrays marked out in time and obviously waiting for break of structure, and then our entry model. So we draw out our premium and discount as always, right? We had that 15-minute stop hunt over here. Now this is our dealing range high and our dealing range low. So if we want to enter on a sell, we want to be in premium levels, right? We don't want to sell in discount, we want to be in premium, which is up here. Now we can outline an order block or a fair value gap after that break of structure, and that should be a solid entry point. So over here we've got a 2-minute fair value gap right over here. And you can see price draws back into premium, then respects it, dips in one more time, and then declines lower in our higher time frame draw on liquidity. So over here we're in that Australian dollar Japanese yen 2-minute chart, right? Not going into the 1-minute chart, we're going to go from 2 to 5 minute, and over here we'll wait for that Asian model kill zone time frame, right, at 8 p.m. to 10 p.m. Now we're in the CE of the daily fair value gap, right, that internal range liquidity. Over here is the CE line, that dotted line over here, and then we wait in our kill zone time, we wait for that 15-minute stop hunt, which happens over here, right? So from this point on out, now we know our first criteria has been met, which is that 15-minute stop hunt, and now we draw out our premium and discount levels, right? So we break structure up here. Now we have our dealing range low, which is down here, into this dealing range high up here. Now a good entry model would be a fair value gap or an order block, right? And it has to be in discount, right? Because we want to buy and we don't want to buy in a premium level. We want to draw back into that discount level down here. What do we see? We have a breaker down here, and you can see price is supporting over here and continuing up and up and up. And we have those clean highs up here, those failure swings above here, right? Think about that low resistance liquidity, and then price continues up and takes out that buy stops over here. Now that second scenario, once again, right, we wait for that 15-minute stop hunt. We're still in the daily fair value gap, right, the daily internal range. We want to go to external once again. So we wait for that 15-minute stop hunt. It happens over here in the kill zone, 8 to 10 p.m. Important, right? And then we're going to look for an entry model. But what do we do first? We draw out our discount and our premium levels, right? Discount is over here, premium is up here. We've got this nice discount order block marked out in time, breaking structure up here, and this should support price to go higher. Right, so over here we got that Australian dollar, Japanese yen daily chart once again, right? Now we're thinking about that internal to external and external to internal once again. Over here we have our discount low into discount high. So we have these failure swings up here, right? So buy side liquidity is that external range liquidity. So after we hit internal range liquidity, which is this daily fair value gap, right? This daily fair value gap has been filled up. Then we're going to look for external range on liquidity. So that's our draw on liquidity for the higher time frame. Then again, we dive into the 15-minute time frame, right? We want to wait for that 15-minute stop hunt inside our kill zone time, 8 p.m. to 10 p.m. Your eye should go immediately down here, right? We wait for that 15-minute stop hunt. It happens over here. And once you see that and price starts to break up higher, we dive in a lower time frame for our entry model. So to illustrate how that looks like, right, with a little bit more annotations, we got this 15-minute purge over here, so that 15-minute stop hunt. So that's a turtle soup for our long, because our bias is bullish, right? We're coming from that daily discount fair value gap, and we want to draw into external range liquidity, which is up higher. So now once again diving into the lower time frame, right? The lowest you will go is a 2-minute time frame, 2 minutes between 5 minutes, right? That's our time frame. We're going to be looking for an entry. Over here we've got all these failure swings, so low resistance liquidity, right? So even better, if we are bullish, we want to have that low resistance liquidity above us. Then over here we seek that break of structure in our kill zone time, right? So it has to happen within our kill zone time. So break of structure, price returns back into discount, and what do we have, right? Premium high into discount low, and we can see this bullish order block with a fair value gap combination, right? That fair value gap and bullish order block combination is typically very strong, and it happens inside the kill zone, so time is matching up with price, and eventually we take out those failure swings, which is low resistance liquidity, and we're going, remember, from the daily time frame, from internal range liquidity, that daily fair value gap, we want to reach into external range liquidity.